Bull Bear Buzz Podcast for decoding markets, fueling minds. Welcome back to the Deep Dive. If you're trying to get a real handle on the markets without drowning in headlines, well, you're in the right place. This is your shortcut.
Exactly. And today, we're digging into the Indian stock market's recent run. It hit its sixth straight day of gains on Tuesday, April 22nd. We've gone through a bunch of financial news reports on this.
Right.
And our job here is basically to pull out what really matters, what's driving things, potential bumps in the road, what the experts are saying, keep you clued in without the noise.
And we'll touch on analyst calls too, but yeah, standard reminder applies.
Absolutely. Their opinions are their own. Always talk to a certified expert for advice tailored to you.
Okay, so 6 days in the green, Sensex, Nifty 50. That's pretty solid. What were the numbers for Tuesday?
Yeah, so the Sensex closed at 79,595.59. That was up 0.24%. And the Nifty 50 finished at 24,167.25, which is a gain of 0.17%.
Okay, but I heard the wider market did even better.
That's right, yeah. The mid-cap 100 index, it climbed 0.8%, and the small-cap 100 is up 0.73%. So it suggests, pretty broad positive feeling out there.
And zooming out a bit, wasn't there like a 9% gain recently?
Out of the last 9 trading sessions, yeah. About 9% up for the main indices. That's some serious momentum picking up.
So what's fueling all this? Can't be just one thing, surely.
Well, definitely not. It's a mix. We've seen really strong performance from financials and auto stocks. That's been a big piece.
Okay.
And also a pretty stellar rebound in FMCG stocks, the consumer goods guys.
Yeah. Like who?
Think ITC, Hindustan Unilever. They were right up there among the top Nifty 50 gainers on Tuesday.
Got it. And I saw something about metal stocks getting a push. What was that about?
Right. So the government slapped a provisional safeguard duty of 12% on 5 types of imported steel.
A safeguard duty. So the temporary protection thing.
Pretty much. Protects the domestic players from a sudden flood of cheap imports. So yeah, that gave local metal stocks a bit of a lift.
Interesting. And realty stocks were flying too.
Yeah, up as much as 6% in some cases. Seems tied to better liquidity, just more cash sloshing around the system, finding its way into property stocks.
Okay, so lots happening on the home front. What about money coming in from overseas?
Still flowing in. Tuesday was the 4th day straight we saw foreign fund inflows. A lot of that is probably down to the U.S. dollar weakening a bit.
Making Indian assets look cheaper.
Exactly. Makes our valuations look more attractive to foreign investors when their currency is stronger.
Makes sense. And the overall Indian economy seems to be helping too, right? Inflation.
Absolutely. Inflation's been coming down, and there's this growing expectation, that the RBI might cut interest rates again.
Which means cheaper borrowing.
Right. Cheaper for businesses, cheaper for consumers, could boost demand, and potentially lift corporate earnings, maybe in FY26. Vinod Nair at Geojet Investments mentioned that possibility.
And didn't the RBI tweak some rules for banks as well?
Yeah.
Something about liquidity?
They did, yeah. They eased the guidelines on the liquidity coverage ratio, the LCR.
Okay, refresh my memory on LCR.
It's basically the stash of easy-to-sell assets banks have to keep just in case there's a sudden rush of withdrawals. By using the rules, the RBI is kind of encouraging them to lend more.
Freeing up capital.
Precisely. Especially, they allowed lower reserves against deposits coming in through digital channels. That news really seemed to fire up the banking sector. The Nifty Bank Index actually hit a new record high.
Wow. Okay, so summing up the domestic side, falling inflation, hopes of rate cuts, easier bank lending rules. Feels pretty positive.
Yeah, and just the general vibe seems better too. Less worry about inflation, those ongoing U.S.-India trade talks, plus the fact that foreign investors are consistently buying. It all adds up to better sentiment.
So what are the pros saying? Are the analysts all singing from the same hymn sheet, or?
Rarely. Which is probably good. You get different angles. Vinod Nair, who I mentioned, he's still quite optimistic. He highlighted the RBI's LCR move and the good domestic macro picture, even with, some potential global worries like the Trump Fed stuff bubbling up.
Yeah, the U.S. political scene always throws a curveball. What about the chart guys, the technical analysts?
Rupak Day at LKP Securities, he pointed out the Nifty formed an indecisive candle on Tuesday, sort of suggests a bit of uncertainty or pause.
Okay.
But he thinks the trend is still bullish as long as it stays above 24,000. That's the key support level for him. If it holds, he reckons it could head towards 24,500.
So cautious optimism based on the charts. Anyone else?
Ajit Mishra at Religare Broking thinks a pause makes sense after such a strong run-up. He did note that the U.S. markets being a bit weak might limit gains here.
Right, a bit of a drag.
Yeah. He expects maybe some consolidation, sort of sideways movement around Nifty's immediate target of 24,250, but his overall view is still positive. He suggests a buy-on-dip strategy focusing on stocks showing good earnings momentum.
Okay, generally positive then, but maybe time for a breather. Watch out for global cues.
Got it.
Let's drill down into sectors. We mentioned a few, but who are the big winners and losers?
Right. So Nifty Realty, as we said, was the star performer, up 2.42%, its sixth winning day. Nifty FMCG also had that strong comeback, up almost 2%.
Yeah.
Then you had consumer durables, PSU banks, pharma, auto, all up somewhere between, say, 0.4% and 1.5%.
And Nifty Bank hit that record high.
Exactly, after the LCR news.
And on the flip side, who missed the party?
Nifty IT took a breather. It was down about 0.57%, ending a 3-day run. So maybe some profit taking there.
Makes sense.
And Nifty Oil and Gas was down just a tiny bit, 0.04%.
Okay. Let's talk specific stocks. HDFC Bank made headlines, didn't it?
It certainly did. The share price jumped over 2% on Tuesday alone, and over the last 6 days, up around 11%.
That's huge. And the market cap.
Crossed 15 lakh crore. It's only the third Indian company ever to hit that massive valuation.
Incredible. Why the sudden love for HDFC Bank?
Seems to be a combination of things. A positive growth outlook, plus their Q4 results for FY25 came in better than expected. Analysts are pretty bullish, too.
Oh, yeah. What are they saying?
Well, Motilal Oswal has a target around 2,200. JM Financial's looking at 2,130. Suggests they see more room to run.
And the technical picture.
Technical folks at places like Anand Rathi and Choice Broking are also pointing to positive signs. They talk about key support levels, prices where buyers might step in, and resistance levels. Generally, the view is the upward trend should continue if it holds above certain points.
Right.
Choice Broking, for instance, suggested looking to buy maybe on a dip towards the 1900-1880 range with potential targets like 2050, maybe 2135 if it stays above 1960. But again...
Yeah, individual analyst views. Got it. Important reminder.
Always. And it wasn't just HDFC Bank hitting highs, right?
No, seems like quite a few were.
Yeah, about 85 stocks hit their 52-week highs. Big names like Bajaj Finance, Eicher Motors, Indigo's parent Interglobe Aviation, Kotak Mahindra Bank, a whole bunch.
And some lows, too, inevitably.
Yep, 29 stocks hit 52-week lows. Names like Sai Silks, Chandawalas Foods were mentioned.
Okay, and within the banking space, beyond HDFC, there was some technical action, something about moving averages.
Right, SBI, Axis Bank, and Bank of Baroda all managed to close above their 200-day moving average, the 200 DMA.
Which is generally seen as a good sign.
Yeah, it's a long-term trend indicator. Crossing above it often suggests the long-term trend might be turning positive, or at least strengthening. Technical analysts are pointing to potential upside for these too, with specific support and resistance levels to watch, again, based on their chart interpretations.
Okay. Now, shifting gears slightly, there was some less positive news around IndusInd Bank. Shares took a hit.
They did, yeah. Closed down about 5% on Tuesday. It came after they announced an internal review of their microfinance business.
Why the review?
Well, it follows an earlier issue they disclosed about a discrepancy in their currency derivatives book. And there are also some newspaper reports, unconfirmed by the bank, mind you, about a potential, fairly large discrepancy in microfinance loans. Plus, their microfinance arm has had issues with bad loans for a while.
So uncertainty and past issues weighing on the stock.
Exactly. Definitely spooked investors a bit. Shows it's not all smooth sailing out there.
No, definitely not. What about strategic moves? Airtel was buying spectrum.
Yes, from Adani Data Networks. Airtel's picking up 400 megahertz of spectrum in the 26 gigahertz band across several key regions.
That's good for
5G. Big boost for their 5G expansion plans. The interesting angle is Adani had the spectrum but hadn't really rolled out services with it.
So Airtel snaps up unused capacity. Smart move.
Seems like it. And speaking of Adani, Adani Ports made a big splash down under.
Australia, right. What do they buy?
The North Queensland Export Terminal, NQXT, it's a major port terminal. The deal value is around $2.4 billion.
Wow. How did they pay?
It's actually a non-cash deal structured through an exchange of equity shares.
Interesting. Why this terminal?
Strategically, it really strengthens their position in global trade routes, especially for Asia. Gives them access to Australian resources, maybe even future green hydrogen exports. Operationally, it means a big jump in cargo volumes and earnings EBITDA.
So fits their global expansion playbook. How are brokerages seeing it?
Generally positive, it seems. Firms like CLSA, Motilal Oswal seem to like the move, maintaining positive ratings and targets for Adani Port stock.
Okay. And quickly, I saw mention of some mid-cap ideas floating around.
Yeah, just a few technical picks highlighted by some analysts for potential short-term gains. Names like Aurobindo Pharma, GICRE, IPCA Labs, Oil India were mentioned, with specific price levels.
But the usual caveat applies.
More than ever, these are just analyst suggestions based on charts. You absolutely need to do your own research and consult certified experts before jumping into anything, especially mid-caps.
Absolutely. Now, pulling back to the bigger picture, we saw India doing well, but what about the global backdrop? Wall Street seemed a bit shaky.
Yeah, there was a weak handover from the U.S., partly due to Trump's criticisms of the Fed chair, Jerome Powell. Raised some concerns about, politics interfering with monetary policy.
Which can make markets nervous.
Definitely. The U.S. dollar index dipped a bit on that, and gold actually hit a new record high. Seems like safe haven buying kicked in, maybe also due to U.S.-China tensions and some worries about a U.S. economic slowdown.
So India's market kind of shrugged off that global negativity.
Pretty much, yeah. Showed some resilience, focusing more on the domestic positives we discussed.
Okay. One other broad theme was about India potentially benefiting from the U.S.-China trade friction. But the analysis wasn't entirely convinced.
No, it was more nuanced. Yes, there's this idea that supply chains shifting from China could help India, but the reality check involves, several hurdles. Yeah. China's sheer export scale is enormous. India's manufacturing is often more fragmented, maybe lower tech in places. There can be quality control issues, infrastructure bottlenecks, complex regulations.
And we still buy a lot from China, right?
We do. Key things like solar panels, drug ingredients, APIs, auto parts. So the Make in India push is there, but it's a long road before India can just, step in and fully replace China in global supply chains.
So opportunity maybe, but lots of work needed to grab it. Makes sense. And finally, the big question that always hangs around, valuations.
Yeah.
Is the market looking expensive?
Well, according to the Buffett indicator, yes, it still signals significantly overvalued.
Even after the recent correction?
Even after. End of March, it was around 126% market cap relative to GDP. That's historically high, though down from its absolute peak. India's forward PE ratio, looking at expected earnings, is also above its long-term average.
And particularly in small and mid-caps.
Yeah, concerns linger there about stretched valuations despite some pullbacks. So while the momentum is up, these valuation metrics are flashing. Well, maybe not red, but definitely amber, a sign for caution.
So the rally's great, but don't forget the underlying price tags.
Precisely. Enthusiasm is high, driven by good domestic news, but valuations suggest keeping a level head and a long-term view is smart. And repeating our earlier point, the specific stock ideas or targets we mentioned come from individual analysts.
Right. Crucial reminder, we strongly advise investors to check with certified experts before taking any investment decisions based on anything they hear.
Couldn't agree more. And hey, for more market insights and updates like this, do subscribe to our channel, Bull Bear Buzz.
Okay, so let's wrap this deep dive. The key takeaway seems to be the Indian market's impressive run continues, mainly powered by domestic factors, financials, FMCG, realty doing well, supportive RBI moves kind of pushing back against some global headwinds.
Yep, and HDFC Bank hitting that 15 lakh crore market cap was a major milestone.
But on the other hand, those valuation concerns aren't going away, and India's path to fully capitalizing on global trade shifts looks, complicated.
Exactly right. Hopefully this discussion gave you a clearer picture of all these moving parts and what the experts are thinking without burying you in data.
So here's something to chew on until next time. With this rally going strong but valuations looking stretched, what signs or signals will you personally watch to judge if this upward trend can last or if a correction might be around the corner? Think about it, consider your own strategy, and please talk to the certified pros for advice specific to you. Thanks for joining us on The Deep Dive.